a year in which we reached new milestones and positioned ourselves for accelerated growth in the future. Despite a challenging macroeconomic environment characterized by a demand slowdown and suboptimal price realization, we achieved significant volume growth. Our export revenue increased from 30% to 34%, even amidst fluctuating demand in key markets. Concurrently, our domestic distribution sales grew, contributing to an overall increase in revenue. In our manufacturing sector, enhanced capacity utilization resulted in the highest ever production of acrylamide liquid, with exports comprising nearly 50% of total sales. The combined performance of both the business segments has bolstered our overall profitability and led to substantial gains in our market share across product lines. The reduction in freight rates and logistics costs enabled us to strategically intensify our focus on exports. We expanded our market presence into high potential regions, including Europe, South America, and the Middle East. Despite overall sluggish demand in Europe, we achieved notable traction as European companies diversified their procurement sources. Additionally, our EU REACH registration and pre-registration for Turkey REACH facilitated the acquisition of new customers and sustained profit growth. Looking ahead, we are planning to focus on exports to Asian markets, particularly Southeast Asia, Japan, and the Far East, due to the re-emergence of challenging trade conditions in the European and American sectors. I am confident that this strategic move will enhance our position and drive future growth, delivering increased value for the company and its stakeholders. Our solid foundation, expanding market presence, focused R&D initiatives, and strong partnerships with key stakeholders, combined with our exceptional talent, were pivotal to our outstanding performance this year. We remain committed to reinforcing these core drivers and have strategically embarked on a transformative path characterized by significant organizational changes. We are dedicated to cultivating a robust talent pipeline that aligns with our vision and supports our long-term objectives. To this end, we have intensified our research and development efforts to enhance our product portfolio in response to the evolving needs of our growing customer base. We have also recruited additional R&D advisors, including a Japanese expert based in India, to further strengthen our R&D capabilities. As a forward-thinking organization poised to capitalize on emerging opportunities, we have undertaken strategic initiatives to drive growth across our business divisions. Key to our future goals is the development of polyacrylamide solids technology, along with the establishment of a new R&D facility in Navi Mumbai. Additionally, we are working on a specialty chemicals project in collaboration with a Japanese partner at our Jagadia site, for which we have already sought environmental clearance. We are also exploring toll manufacturing opportunities with international companies to further propel our business growth. Strengthening our relationships with our key partners, who are essential to our expansion plans, remains a priority. Furthermore, we recognize the importance of infrastructural development in preparing for future growth and are planning to acquire land to enhance our future operational space. Looking ahead, our strategic focus will be on further expanding our market reach with the continued support of our growing sales team. We are also planning to introduce new products into our distribution portfolio, which is expected to benefit us in the coming year. The addition of new markets, both in manufacturing and distribution, will further drive our growth. After a prolonged period of subdued demand, the domestic market is showing signs of recovery, which we anticipate will enhance our sales performance. Furthermore, we expect to maintain steady volume in our export business to the US oil and gas sector. Concurrently, we will persist in our efforts to minimize our environmental impact and enhance safety measures, guided by our validated 4R approach: renewable, recycle, replace, and reduce. I would like to take this opportunity to express my sincere gratitude to our esteemed board members and stakeholders for their unwavering support and contributions, which have been crucial to our success over the past year. I extend my heartfelt thanks to our customers for their continued loyalty and to our suppliers and principals for their
answers and responses. Question number 1. Could you please share the capital investment plan for the upcoming projects and the expected revenue? For our upcoming projects, we are projecting a capital investment of approximately rupees 60 to 100 crores for the setup of our polyacrylamide solid facility, depending on the sourcing of our equipment, alongside rupees 20 to 25 crores for the specialty chemicals project. Once these projects are fully operational, we anticipate a significant increase in our manufacturing revenue. At full capacity, the polyacrylamide solid facility is expected to generate around rupees 250 crores in annual revenue at current market prices, while the specialty chemicals project is forecasted to contribute approximately 35 to 40 crores per year. Additionally, the company is always on the lookout for new manufacturing opportunities, leveraging its strong relationships with principals from the distribution business to drive future growth. Question number 2. With increased globalization, what has the company done to increase the international breadth of knowledge and experience on the board? Answer. The company's board is well experienced and geared up to navigate the challenges and opportunities presented by the increased globalization. We are proud to have Mr. Anup Jatia as our non-executive chairman, who brings a wealth of expertise cultivated over more than 20 years in the international chemical business. Having grown up in Japan and completed his education in the United States, Mr. Jatia, who is based overseas, maintains robust international networks and is pivotal in fostering enduring relationships with our overseas business partners. Additionally, Mr. Abhishek Murarka enriches our board with over 18 years of experience in finance and investment, supported by his educational background obtained overseas. His global perspective is invaluable as we navigate international financial landscapes. Mr. Rishabh Saraf, with more than 20 years in manufacturing, marketing and exports, comes from a family with a rich industrial legacy of over 60 years. His experience further strengthens our board's capability to engage with global markets effectively. Ms. Deepa Poncha, with over 30 years of experience as a senior human resource professional, brings a wealth of knowledge and expertise across various human resource functions. Her leadership roles in both domestic as well as international companies across diverse sectors enhance our strategic vision and drive for growth. Beyond the board composition, we have strategically hired advisors with international expertise and engaged a Japanese national in our R&D team in India. We are actively seeking to recruit talent from overseas to enhance our capabilities across various departments. Moreover, we have established strategic partnership with global firms, increased our participation in international forums and seminars, and successfully registered with EU REACH. Our commitment to excellence is further demonstrated by certifications from EcoVadis as well as ISO 9001, 14001 and 45001. These initiatives collectively position our company to thrive in a globalized economy, which ensures a diverse and knowledgeable leadership team that reflects our commitment to international growth. Next question. How does management monitor intercompany transactions? I assume that this question refers to related party transactions, as we do not engage in transactions with our subsidiary or holding companies. Our intercompany transactions primarily involve rental agreements, sale and purchase of goods, including certain raw materials and duty-free licenses, in all amounting to approximately rupees 7 crore during the previous financial year. We ensure that these transactions are conducted at market prices, adhering to arm's length pricing principles. This means that we price our intercompany transactions as if they were between unrelated parties, thereby reflecting fair market value. Additionally, we have established stringent internal policies to govern these transactions, ensuring compliance with all relevant legal requirements, including tax regulations and corporate governance standards. Our robust internal audit system regularly reviews these transactions to guarantee that they meet both our internal standards and legal obligations, reinforcing our commitment to transparency and ethical business practices. Question: what are the principal objectives in the company's business plan for the next year? We are excited to share our key objectives for the upcoming year, which focus on expanding our market presence in both the distribution and manufacturing business. In distribution, we aim to increase our market share for core products such as resorcinol, ethylonamines, and purified isothalic acids, supported by strong support and partnership with our principals. In the manufacturing sector, we aim to prioritize market reach while actively pursuing new export opportunities in Southeast Asia, Japan, and the Far East, alongside increasing sales in our current markets such as Europe, West Asia, and the United States. Our R&D initiatives will continue to advance the development of polyacrylamide solids along with 3 other active projects in hand. To bolster our R&D capabilities, we are enhancing our setup by hiring experts from overseas as well as establishing a new world-class R&D center. Additionally, we are committed to strengthening our workforce and restructuring our operations to improve overall performance, efficiency, and profitability. Through these efforts, we aim to achieve sustainable growth and drive innovations in the chemical sector. Next question: how does the company assess its liquidity and the availability of funding sources from operations? Our company employs a comprehensive approach to assess its liquidity and the availability of funding sources to support ongoing operations. We regularly monitor cash flow statements and evaluate our fund requirement based on current operations as well as future projects and capital expenditures. This prudent management of our liquidity position ensures that we can effectively meet our operational needs while preparing for growth opportunities. In line with our commitment to returning value to our shareholders, we have distributed surplus funds generated from dividends received from our subsidiary by announcing an interim dividend of rupees 2 per share. Additionally, we have leased a new facility of 6,000 square feet to establish a world-class R&D center, enhancing our innovation capabilities. We are also planning to invest in new land to create a land bank for future projects, which aligns with our ongoing efforts to explore new manufacturing opportunities, supported by our strong relationships with our principals. Through these initiatives, we continue to uphold a robust liquidity position, ensuring the availability of funding sources to capitalize on future growth opportunities while maintaining operational stability. Final question: what is the company doing to improve shareholder relations? To enhance shareholder relations, our company has adopted a comprehensive strategy focused on open communication and active engagement with our investors. We have improved our communication channels by issuing quarterly press releases and hosting webinars that provide updates on our performance and strategic initiatives. Additionally, our investor relations section on the website has been revamped to offer easy access to financial reports, governance updates, and essential news. In our commitment to transparency, we are also enhancing our annual report to ensure it is more informative and aligned with shareholder interests. Furthermore, we are leveraging our LinkedIn page to engage not just with shareholders, but also with a broader audience of stakeholders. We are in the process of revamping our corporate website to ensure it provides up-to-date information and a
Ambrish, I think we lost you. Okay, I think Ambrish was pretty much done with the question and answer. So, and I guess the team is not available right now. They're having a connection problem. So I would like to propose a vote of thanks. Uh, I thank the other directors who are here, as well as the shareholders who have